Hi everyone, I'm Matt from Look Into Bitcoin, and today I'll be looking at if the market cycles of Bitcoin are likely to come to an end with major institutions joining. To do this, we'll be looking at a number of resources, all freely available on lookintobitcoin.com, your number one source for Bitcoin information. If you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So right now we're just on the Look Into Bitcoin site, and I have a couple charts lined up that might help us explore this topic further. So the first one is the RHull Ratio. Now this is looking at the relationship between new investors in the space who've only been in for about a week at a time, and investors that have been in for a number of years, 1 to 2 years at a time. So we can see here the relationship between the RHull Ratio and the price here as these tend to peak together and bottom at the same time. We can see these general buy and sell zones here that have historically been very effective for accumulating and profit taking in BTC. What you can potentially notice is with each market cycle, these peaks and bottoms tend to converge a little bit every time. So in this most recent bull cycle we had here, price topped out, but it didn't reach the heights it had reached in the previous few cycles. And same for the bottom here. As we bottomed in the previous 2018 cycle, we didn't reach quite as low as the previous one. And if we're to bottom in the near term again, we'll have bottomed at an even higher rate than previously. So as you can probably see, as the peaks are coming in and the bottoms are converging too, we get this tightening in the RHull ratio. Now this can simply be explained by the fact that as Bitcoin grows as an asset class, as it gets mature, and as major institutions start to join the asset class, it grows as an asset class in terms of market cap, but also maturity. Bitcoin a few years ago was incredibly volatile and very speculative in nature. Potentially people getting into it a few years ago weren't sure if Bitcoin was even going to make it as an asset class in the long term. It was only a few million or even potentially a couple $billion in total size back then. And it was potentially very easy for price to be manipulated to the upside or the downside. And again, there were some doubts whether the long-term longevity of Bitcoin surviving. Whereas I feel now we have potentially surpassed that point and Bitcoin as an asset class is doing as intended. But as major large institutions start to join the space, the volatility is dampened somewhat, the speculative nature is slightly subsided. And as the Bitcoin halving cycles of every 4 years come and pass, we see the inflation rate decreasing. And as this all ties into the asset class growing, it generally just becomes potentially more in sync with traditional financial cycles. And whereas previously we'd see Bitcoin cycles lasting just a few months to a year or two at a time, we may see Bitcoin cycles last multiple years at a time. The second chart we have is the Bitcoin logarithmic growth curves. Now, all of the charts we see here are on a log scale, so it's increasing by a factor of 10 on the y-axis at every interval. And this way we can actually see the factor of multiple increase as Bitcoin grows as an asset class. So while price up here has decreased and increased multiple thousands of dollars as opposed to just a few dollars back here, if we're looking at percentage-based volatility, we can see that these logarithmic growth curves are actually tightening over time. Now, these logarithmic growth curves are taking into account all of Bitcoin's price history and logarithmically fitting that with this center line here and then adding a number of deviations, which has historically been a great way to deem if Bitcoin is potentially undervalued as we reach the bottom of these curves or overvalued as we reach the top. But again, as discussed, these curves are actually tightening in and are likely going to continue to tighten over time as the asset class grows and as more money comes into the space. We can look at it as a simple matter of mathematics. As an asset class reaches $1 trillion, the amount of investment needed to increase that 50% becomes a very substantial amount of money compared to an asset class which is only worth a few $1 million. Increasing that 50% just requires an incredibly smaller amount of capital in the first place. And also, as we have a constant influx of new users getting in, more so than we have ever done in Bitcoin's price history, and this is likely going to increase a constant stream of people getting into Bitcoin for the first time as we have regulatory approval, as we have more means to actually access and invest in Bitcoin and cryptocurrencies. We're going to get these long drawn out cycles that may be dissimilar to what we've had previously in Bitcoin and as we become more of a traditional asset class. So just to summarize, Bitcoin is becoming more widely adopted and acknowledged asset class. This is from day-to-day users joining the space up to large major institutions investing billions for the long term. And as the asset class grows in value and usage, the speculative and volatile nature of cryptocurrencies in general will likely decrease as the market class evolves. As we've seen from the RHull ratio, we see this convergence between the extreme highs and the extreme lows as the asset class just generally matures and becomes more widely adopted. However, the halvening events will continue to have a cyclical impact on price. As discussed, the inflationary rate decrease that happens every 4 years is still going to lead to a speculative nature in the Bitcoin price, as well as the amount of emotional driven decisions in the market that exist in all investment markets. And that is extreme periods of fear in the market when price usually tends to bottom out, and extreme periods of euphoria and greed when we potentially get overheated market conditions to the upside. So all of this will still provide opportunities to strategic investors. But as the Bitcoin asset class grows, we may look at this market as more of a traditional market, as opposed to previously when we saw it as a very unique speculative asset class. If you like this video, then please visit lookintobitcoin.com, where you can consider becoming a site subscriber to gain access to live charts, in-depth newsletters, indicator alerts, private trading view scripts, and more, all for a fraction of the standard industry price. Thank you very much for watching, and I'll see you in the next one.